Hey everyone, welcome to Money Wire Work. Today we're going to be talking about the S&P 500, where it's headed, the new inflation, the CPI report, and how I am shorting the market to make money in this bear market. All right, so let's just get into it right now. Now, for starters, on the S&P 500, we saw this trend going up to the upside. It started to fail, and then we started to see some recovery. Now, if this had broken through the trend line and went above and maybe reached about the 421, 422 level, we could be looking for a bounce, just a healthy breather, and then a come back up and end the bear market to sort of start the recovery. However, we did not see that. The CPI data came out at 8.3%, and the market reacted pretty strongly to that. So you can see we opened the day at about 402.39. We reached up to about 403.23, and then we fell back down. Currently, right now as we speak, we're at 393.10, and we're looking for more downside. Now, as I said a couple weeks ago, I did think we are looking at a lower low. I said that as we were coming up here towards this resistance line, and I started to go short in this economy, or this downtrend right here in this market. I opened some positions in SQQQ, some shorts on SPY, and actually as of right now, if we go to Starbucks, I entered a short 2 days ago. And you can see right here, this is my short position. So as long as we're below this break even, which is 391.50 by the expiration of the 18th, I'm making money. And as of right now, I am green on it. Now, this the ticker Starbucks right now is holding up a little bit stronger than what the S&P 500 is. However, I do think in the next couple of days, Starbucks, the stock will reflect the market, especially if we have another down day. So I think right now, traders are looking at this right here and still trying to see this as a continuation. However, after today, it's showing signs that the continuation probably will fail. And this key level right here for that simple moving average, which is the 25, the 85, 89 mark. Once we get below that, we're looking to have even stronger of a short. Now, if we go back to the SPY and we take a look at the VRVP, you can see the volume and how it reflects. Now we hit this big sort of support slash resistance right here at 393, and I think we're going to fall through that. Once we fall through that, you're seeing less volume as you go down. So that's why this thing could fall more, and it has more room to actually fall. Now, what I'm going to do is I'm going to hold on to my Starbucks position until I see any sort of recovery in the S&P 500. And then from there, I'll reevaluate. But some key things to look at right now if you want to make money in the down market: short the SPY, open a credit spread if you want some lower risk. I highly suggest credit spreads. They cap your upside, but at the same time, they cap your downside. And you don't need to see as big of a price move as you do as just a regular naked position, okay? Or just one single option, all right? So that's what we're looking at right now. If we just want to bring up the SQQQ quick, I did open a position on the SQQ this morning, and you can see that it already is making money. It's in the green for me. I opened it up at the, I think it was the $44 level, and it's up $3 a share since then. So I'm going to be scaling into that. I opened one position right now. I think it was about 10 contracts. So I'm going to be scaling in. I'll do 10 more, maybe 10 more after that, and I'll just keep scaling in. Actually, too, one good strategy is to scale in more aggressively. So my next scale in might be 15, but we'll see. And keep in mind, as I said in a previous video, SQQQ is a little bit more risky to get into, just because if the market were to recover, if QQQ were to come back, NASDAQ comes back, overall market comes back, SPY, everything, you may never see these prices again, and you could completely wipe out your position. So you want to have a tight stop loss. There's one thing I am doing in this market right now is any position I'm opening, having a tight stop loss. And that's good for any trading, whether the market comes back or not. Have a tight stop loss, have a take profit. order set in place, because if you get out of the market, you stopped out, you can always get back in, but cover, protect your gains. Okay, once you get in the green, move your stop loss up and trail your stop loss. You can either set a trailing stop loss or you can do it manually, but if you do it manually, you have to have a disciplined strategy to do that. Okay, so that's just a quick update. If you like this content, want to see more, please like, subscribe, hit the notification bell. I highly suggest you check out my trading basics series. I did one on the simple moving average. I also did one on the RSI. I'm going to be doing more to come. They take a little bit more time to do because of how intricate and how in depth I do it. I also make it fun and entertaining for everyone. So check those out. I'll keep updated posts on the market, but until then, I'll see you next time. Thank you.